Righty, traders. Good afternoon, good morning, good evening, and welcome to the live trading session. Traders, we're going to be looking at NQ. We're going to be looking at certain currency pairs, breaking it down. Some of you have been following my jackpot signals that have been part of the March Madness, and we're going to go ahead and cover some of those pairs as well today. Take a look at some strategies, and let's go ahead and see what the market is offering us this beautiful Friday morning. So I'll see you guys right after this. Alrighty, traders. Well, welcome back for another Friday's session. We got a lot to cover this morning. There's been a lot of news announcements taking place this week. A lot of rate decisions. Markets have been pretty wild, but we're going to go ahead and break it down today. We're going to look at NQ in the next 10 minutes from now. We're going to have the opening bell kick off, and we're going to take a look and see a setup with the markets. Traders, let's go ahead and share my screen and jump into the trading right now. Now, if let's see here if we can go ahead and share. Looks like it's not sharing. Give me 1 second here. Why is my not sharing? There we go. All right. Took a little while, but I got it right. Okay, traders. So we're going to go ahead and take a look and see exactly what is going on with the market this morning. And pay attention to some of the details here. Here is the news that came out this week. You can see, started off on Monday. We had the Aussies rate decision. They raised the rates 25 basis point. We saw some market movement to the upside, and then a sort of downside move in the mid part of the week. We also had the Bank of Canada keeping their rates unchanged. We've seen some movement to the upside for the Canadian dollar, specifically with the war causing the oil prices to push up. So we've seen some strength in the Aussie, but not a lot as we might think. Specifically the Aussie Canadian dollar, we would have expected more of a stronger downward move on the Aussie Canadian dollar, which we did not. And then, of course, we had the Fed's rate decision. They kept the rates unchanged at 3.75%. We then had the Bank of Japan keeping their rates unchanged. We had the Swiss National Bank as well, keeping their rates unchanged as well at 0%. And then, of course, the Bank of England or the UK, we had them keeping their rates unchanged at 3.75%. And then the Eurozone, same thing, keeping their rates unchanged at 2.15%. So a lot of countries are concerned about the war, even though we've seen a little bit of a downside tick in inflation in some of the countries. We also seen, of course, the concern that inflation may start rising because of the war, because of oil prices rising as well. So all of this started to play out. Now, traders, that's all great, but how does this all play out in the market? How do we trade it? How do we actually get involved in these type of setups? Well, we're going to start off this morning with NQ. And traders, if you want to get involved with what we do every week, we go into live sessions. We trade NQ every morning, Tuesday, Wednesday, and Thursday. We've got a lot of students making some good profits and generating some great profits, but also at the same time learning as we mentor them through the process. If you want to take a shot at it and learn a little bit more about it, take a ride. There it is. You're in the top left. You see there, it says take a ride. Go ahead and get signed up and get access to everything we do, from trading bots, trading indicators, trading NQ, trading futures, Forex, all of that good stuff, even getting access to funded capital as well. We do everything. We provide everything. We help you every step of the way. So don't feel like you're new at this stuff and you're not going to be able to get it. We do onboarding on each and every client that signs up. No matter what price you pay, we do an onboarding to get you guys set up and started. And we answer any questions that need to be answered. Now, traders, I want to go ahead and take a look at the NQ setup right here. We do want to see the market break out of this range. Now, we've had an early breakout. You can see right here. At around about just after 9 o'clock, we had an early breakout here. But it might not be the breakout we're looking for at this point in time. All right, we want to see something a little bit more substantial. Now, just so that you know, we don't have to do anything when it comes to setting up the trade. Our ATM model that we currently trade, we trade multiple models. This is just one of the models that we do trade that a lot of the students are making money from. And you can see here on the right-hand side, this system is completely automated, which means that the indicator itself can be actually automated, that it can actually place trades directly into your trading account by simply going ahead and using a third-party service to be able to get that indicator to fire trades for you. So the thing here is that we want to look for the breakout. Now, like I said, I don't have to do anything. The system is building up all the information and is actually going to plot an entry point for us. You'll see this morning how it's going to be done. We had the same thing happening yesterday, and you can see right here. But now we're not going to take any action until after 9:30 in the morning. You can see this was the yesterday's trade right here. There we go. We had a nice little breakout. We had a false breakout first, and then we saw the market take out that low. Price came back in. We got an entry point here. You can see the system went ahead and indicated exactly what we should be doing, entering the trade. Target is all the way up here. And if you don't know how to work out your equity management, the system works out everything for you and tells exactly what you should be doing based on your risk exposure. All right. Now, let's go ahead and take a look and see exactly where we are in today's session. All right, so here we go. We're getting a little bit of an early break. We've got about 5 minutes left before the market takes out, sets up an opportunity. So right now, because we've got 5 minutes left, let's wait and see what happens in the next 5 minutes. We'll let this thing play out. Let's take a look at some of the trades that we're currently holding here on our jackpot trades. So as you can see right here, traders, we have multiple positions in. We're building up good equity here, but we do have drawdowns. Listen here, traders, I want to just be honest with you. For those that have been following my signals for years and years and years, we've made a decision here in 2026. We've been working on this for about a year, and we finally got it launched out here in 2026. And some of you have been asking the question, Big Dog, why do we put stop losses? Why don't we take the positions? You also been saying, I don't like to get into multiple positions. I like to cut it off. I'd like to know exactly what my risk is. Well, we've gone that step further. Right now, with the new system that we have right here, you get exactly that. You can see here we've gone ahead. Last week, I told you we've maxed it out at 5 entry points. Looking at the system, I've actually posted that in my Telegram channel. We're now actually looking at 10 entry points. So we've gone ahead and entered 10 entry points. But what we've done is we've taken our risk on each entry point from 0.1% to now only risking 0.05% on each trade. And what we're also doing, traders, is we making absolutely certain that we're following the trend and the market bias. And how do we know that? Well, traders, here on the top here, you can see here that the directional bias says bearish. And of course, the trend says bearish as well. So we are bearish on the euro pound. Now, I'm going to go into this a little bit more in detail when we get through our NQ trade. But basically what it looks like the market is in a corrective move with inside that trend. Now, we've got a stop loss right here. You can see it's trading stop loss right up here at top. So it's very far away. We've only got 2 entry points in. And according to my system right here, you can see here it says 0.1. That means that it's only going to be entering only 3 entry points. All right. Only 3 entry points are going to be entered. And if that's the case there, look at my risk. 0.05 on each entry point. That means my total risk on this trade is going to be 0.15%. That's it. So if worst case scenario, this thing doesn't work out for us, That's the type of risk that we're risking. Now, the reason why it's not going to pick up more than 3 entry points, because if you notice where the fourth entry point is going to be, the fourth entry point is going to be above our stop loss. And because it's above the stop loss, we're simply not going to be entering that because we will be stopped out of that point. All right. So, worst case scenario, traders, we're taking out, we are going to be stopped out at that point. Now, if you're asking traders, if you're asking Big Dog, how do I get access to that? We've got a trade replicator ready to go for those that want to go ahead and connect. They can connect their accounts and automatically trades will be executed in their system. Now, if they want to manage their own trades on their own, they can absolutely download our Smart Entry AI bot, load it onto the MT4. We'll help you with that process and set it up that it trades everything that you wanted to trade, including gold and ETH as well. So you want to include gold and ETH as well, you can certainly go ahead and do that as well. All right, traders, we've got about 1 minute left. We're going to go put our focus here on the NQ chart this morning. And by the way, traders, I hope everyone is having an absolute fantastic time so far this week. All right, things have been really good for us. We're really kicking off on a nice 2026 start. Things are really showing great. Now, traders, once again, if you want to take a quick ride with our, take a sort of a trial run on our systems, check out this QR code at the top here, scan it, get access, or you can simply go to our website, tradersnetworkclub.com, and check it out, and you'll see what's going on with the market. All right. In traders, we talk about funded capital all the time, and the same thing applies here. Oh, hold on. Did you see something? Traders, take a look over here. Can you see right here? All right. Can you see how the market's currently showing that we have? Now, this is not going to be active until this candle closes out. Right. But it's already showing us that we should be active on this trade. So which means traders are going to start getting ready to enter this trade. Now, I could wait for this candle to close out and look for a pullback to enter. Let's wait and see here. Now, I'm going to be honest. This is starting to move far away from my original entry point here. So we're getting a very early move, a very sharp move to the downside. Now, this is my target down here. We've got a 418 tick window. All right. If this market is going to move that fast, we're probably not going to be able to get into this trade. All right. You can see my automations is already starting to fire off trades, and that's off the 1 minute time frame. So if I go to the 1 minute time frame right here, here's the 1 minute time frame. This has already gone ahead and fired a trade. But the problem here, traders, and this is the stuff that we teach. You see this distance here from there to there? All right, that distance means that the midpoint is our discount zone. So because the discount zone is right there, we really don't want to go ahead and get into that trade because we're trading discount. Now, take a look right here. You see how the market's gone back and forth here and hit the limit here? So this means that our trade is actually come and gone. This was an opportunity, but because the market has gone through the range so quickly, traders, it means that my ATM model that you should be trading, the system's already telling you here, void. Void means that we've already gone and sweep the buy side, sweep the sell side of that range, and there's no trade available on that strategy. Now, because of that, that doesn't mean that I can just stand aside and not do anything. Now, what I'm going to do is I'm going to go to a different approach. So my ATM model right now has already gone ahead and swept the high, swept the low. It means there's no trade, all right, specifically on that model. Now, what I'm going to do is I'm going to go to my 5 minute time frame right here. Let's go to the 5 minute time frame here. And what I'm going to do is I'm just going to flip this indicator on here for a minute. And this indicator is actually going to be telling me what my 4 hour is going to do. But I'm going to go to the 15 minute here. Now I'm going to go to the 4 hour time frame just to take a quick look here what the 4 hour looks like. All right, so notice how the 4 hour is sweeping liquidity down here. So traders, we may be looking for the market to go back up. It's taking out liquidity down here. So there's a high probability that we're probably going to chase back up north. So let's go back to that 5-minute chart. And in the next 2 minutes, this 5-minute candle is going to close out. So I'm going to do a little bit of a scalp trade here this morning because if that model is not going to play out, then let's trade the 5-minute. Now, here is the 5-minute. I'm going to mark off the 5-minute high here. And this is current low right there. So I'm going to mark it off here. Let's just mark it off as a 5-minute. So let's go range. Let's do here. Let's go. Let's see here. 5-minute, 5-minute, 5-minute. You know what? Actually, I have to do this. My bad. Let me do this. Let me just mark it off with this. And let's see if that is the range high. There we go. So 5-minute range high. And I'm mark off the low. I might have to extend that, but I'm going to mark this off as a 5-minute low here. And we got, where did I say that? 5-minute? All right, there we go. All right, there we go. So got my range high and range low. All right, now traders, what I'm going to be waiting for here, right, is I'm going to be waiting for a breakout. Now, why do I look at my, why am I got my 15-minute time frame set up over here? Because I want to pay attention to the 15-minute time frame. Now, what I'd like to see is this candle right here break through. I'd like to see expansion move through that area. Now, you can see the 5-minute also showed that it's actually made some profit here. So we actually got in the trade and it's closed out with profit. So this is actually, this trade's actually non and void. But let's go. I'm going to hide this indicator for a minute here. So just for a minute here, I'm going to hide my indicator. And I'm going to pay attention to now this model here that's setting up. Now that we've broken through this, let's change this to a 5-minute time frame. All right, there's the 5-minute candle. And now I've got the range. I'm going to go back to, I'm going to go to my 1 minute here. All right. So here's the 5 minutes right here. Here's my range high, range low. All right, I'm going to mark off the range high. I'm also going to mark off this area here as my my opening range high for now. There's the opening range high. Now, here on the 1 minute time frame, I'm going to mark off a fair value gap here. Now, remember what I said on the 4-hour time frame, right? On the 4-hour time frame, I mentioned that we've got this. I mentioned that we've got this this sort of sweep of liquidity below, right? We had the sell side looks at a sweep, and now we're looking for possible the market to rally back up north again. So I will be interested if we get any sort of push to the downside. Let's go back to the 4-hour right here. Let's go ahead and pull in those proper levels here. So I'm going to grab this and I'm going to mark this off down here. So there's your sell side liquidity right here. All right. And we can see that the market had a little bit of a sweep here. I'm going to mark this off as a liquidity sweep to see if we're going to get that as a sweep. All right, there it is. That's off the 4-hour time frame. It's important to note that off. Now, if the market does sweep that, we can turn around and head back up north. Now, remember, at 10 o'clock, which is in the next 20 minutes, we might get an opportunity. Now, the 1 minute is already signaling a buy here. I don't know if it's closing out a position, but it's signaling a buy here. Let's go back to the 1 minute here. I don't have a buy signal yet. No. All right, still looking for the market to... Now, traders, the one thing that we teach our students is, when is the best time? When is the best time to enter the market? After manipulation, right? Remember, if we speak about the AMD setup, it's accumulation, manipulation, and then distribution, right? So the best time to enter the market is after manipulation. So if the market's accumulating, all right, We're going to look for a liquidity sweep, and then we're going to look for the rally. So let's take a look and see what happens. Now, if the market is going to move further down south, I want to see a 5-minute closeout candle. And I also want to see a nice clear break of that and the retest of that break. So what I'm basically saying is, if price is going to break through this 5-minute range low right here, I want to see, and here we go. There's the 5-minute right here. And we can see this doesn't, oh, looks like my data is all messed up here. Hold on. This data is messed up here. Let me go ahead and switch this off here. I'm just going to go ahead and refresh this. Why do I have a gap here? Let's go take this off. Let's go and refresh this chart. Let's get our data back here, reload it. Okay, so here we go. Let's see if we go back to Ethereum here. Okay. All right, there it is there. Let me go hide that. I'm going to hide my model, my A model here. Let's go ahead and hide that. All right, perfect. All right, there we go. There was a little bit of some data disruption here. So there's the 5-minute candle, and that's it there. Now let me see here. This is the 15. Yep, that's the 15. So go back to the 5. So notice how we're not breaking below there, right? We're not breaking a trade. It spiked through there. So I'm going to go to my 1 minute and my 2 minute here. I'm looking for a setup here on the 1 minute and 2 minute. There's a fair value gap sitting over here on the 1 minute. And the 2 minutes, we've got a larger fair value gap here. Now remember, traders, if I'm going to trade the breakout, then I need the market to break out the high or the low. And so this becomes a patient game. And listen, I'm just going to be straight up and honest with you, everyone, that there's not always going to be a trade setting up here, right? There's not always going to be a trade setting up. So we got to be patient here. And if it doesn't set up, then we simply just don't trade. It is what it is. Now, if I look at the 5 minutes right here, we got about, well, we've actually just opened up a new candle here. So let me see how the 5-minute closed out. Okay, so that 5-minute candle didn't close out. It didn't do anything there. And we got this candle right now. So it looks like we really got a little bit of manipulation below there. And if I look over here, there is a fair value gap sitting over here that price did go ahead and tap into. Ooh, all right, so it looks like it is trying to move. Now it's coming back to test the 1 minute fair value gap here. Gonna get a little bit of price rejection right here. And keep in mind, we're still trading inside the range. Now, if it breaks out of this range, if it does break above here, we are going to look to see where buy side liquidity is at. Here is buy side right here. Let's go to the 4 hour to double check and confirm that. So here is buy side sitting up right here at the top. I'm going to move this all the way up here. All right, so this is where we can expect the market to find some buy side liquidity up here. So if we do start rallying north, here is where our draw is going to be up here at the top. We're going to pay attention to that. We've got a big bullish 5-minute candle right here that's got 3 minutes left in the candle. So looks like we've got a nice bullish candle right here. Now, I did say that my draw was bullish, but remember, we're still inside the range. Still in the range. We haven't broken out of the range yet. Gonna wait for that candle to go ahead and confirm. Now, traders, it's always important to note what the larger time frame is doing. Let's go take a look at the 4 hours doing. And this is also, we've got about 20 minutes left. Now, remember, we have 20 minutes left. And if the 20 minutes, if I'm not going to get, this is what the 4 hour looks like on the 20. So in 20 minutes, this is how the 4 hours is going to close out. So if it closes out like that, a lot of indecision, that's a good indication that price may have found the bottom and turning around and heading back up north. But if I get a trade signal here on the 1 minute or the 2 minute, I'm going to go ahead and trade that. Now, remember, traders, what I said about the best time to get into the market is with manipulation, right? So what I'd like to see is this hold, right? This 1 minute fair value gap hold, and price come back down and sweep the low right here, and then come back inside and give us a nice, fair value gap inversion back up north towards our opening range high. So there's a good chance that we're going to be still chasing off this opening range high right here. I'm going to wait until about 10 o'clock to make a decision on that. But look at the 4 hour. Look at that 4 hour. The 4 hour is very, and it looks like we might have to wait another 15 minutes before we make a decision on this. All right, so while we're making a decision on this, let's go ahead and quickly flip over here. I want to go ahead and share something with the traders. And give me 1 second here. All right, for broker, check out ACAP. We have partnered with ACAP. They are the sponsor of this. We want to go ahead and thank them for that because it wouldn't be possible without their support. We do appreciate them. If you guys are looking for a broker, great people to work with, check out ACAP. Now, the bonus is, traders, if you make a decision to go with ACAP, we do have special offers. All right, we do have special offers. You can get absolutely, you can get all our services for free up to 12 months by funding a trading account with $10,000. I mean, you're going to trade, right? Fund it with $10,000 and you can get our services absolutely free for the next 12 months. All right, check it out, ACAP. All right, check out ACAP. Here's the QR code right down here. Just by opening up a live trading account, if you want to get involved in trading, that means trading futures, trading crypto, trading Forex. We do all of that. And by opening up a live trading account of $10,000 or more, you get free access to our services for 12 months straight. All right, so it looks like NQ is still busy making its move right here. Look at the 4 hour. Now, remember what I said to you? I'd like to see the market create a manipulation first. All right. So we see how the market has held up over here. We have an order block sitting over here. This order block is becoming a breaker block sitting over here. So here's an order block becoming a breaker block right there. The 4 hour time frame still looks a little choppy. I'd like to see the 4 hour time frame close out like something like this, but still sweep the low and then come back up again. So here is a inside fair value gap. This becomes tradable now. So you see this? This is becoming an opportunity here. So we're going to mark this off as a fair value gap. Now, this fair value gap here, less interested in this fair value gap here, because now we have an earlier entry point of a possibly reversal. And we're going to jump back into the currencies this morning. We're going to take a look at the currencies. Stick around, my friends. We've got a lot to cover right here. Specifically, US dollar CAD. We look at that one. We've got 8 positions in. That's the only one really. Actually, there's 3. Euro, Aussie dollar, pound, US dollar, and the US dollar CAD. Those are the big highlights for this morning. We're going to watch those pairs. And we can see it's actually trading close to its profit targets. We're going to monitor exactly what that's doing this morning. All right, looks like we got this 1 minute fair value gap holding here. Now, I want to remind everyone we're still inside this range. All right, we're still inside this range. All right, we have not broken out of that range yet. This is the 5 minute range. We got the high right here, range high sitting over here. Actually mark that off as my 5 minute save as M5. Range high. Market's a little choppier inside the 5 minute range. So how's that? The market over the last 20 minutes has not moved out of a 5 minute range yet. That's tight. That's really tight. And this range is around about, let's see here. We've got about, well, it's still 427 ticks. Now, traders, I want to go remind everyone 427 ticks is still a lot that traders could trade at the bottom and the top. If you're just trading the bottom and the top and you're trying to pass your evaluation, you can do it in one trade. If you've got an evaluation account and you're looking to pass an evaluation account, when you see a range of 400 ticks, it offers you an opportunity to be able to find a trade at the bottom or the top of the range, trade the opposite side, and actually go ahead and take some profit on that trade. Now, this is a bonus here. I can actually change my system here. Check this out. I can actually go to my system. If I want to look for that gap, check this out. I can go ahead and take my system right here, change the time here from 9:30 to 9:35, right? So 9:30 to 9:35, that's going to be my range. And then I'm going to look to trade from 9:35 right here. And if I set that up right here, now I've got my range plotted right here. So if I take my indicators, let's go ahead and do this. If I take my drawings off here, here's the range I'm looking to trade. So now my system is going to be looking for this and giving me the entry point to either buy or sell on the 1 minute time frame. All right, and you'll see as it starts trading below the range, it'll indicate here that it's actually looking to sell. It'll have to close below, and that's the manipulation we're looking for there. You see there, that's turned from a buy to a sell opportunity. So let's wait and see. So now I don't even have to put any indicators on here. I'm just going to use my system. My system will give me the signal, whether it's on the 1 minute, the 2 minute, it'll give me the signal exactly what I'm looking for. And we're still paying attention to the 4-hour candle. So we've got some fair value gaps on to develop here. We're looking at this fair value gap holding here. We've got now a smaller fair value gap developing right here. And we said that if we're going to see the market move in a direction, it's going to have to be manipulation. Now, I do want to go to the 5 minute time frame once again here. Let's go to the 5 minute time frame. I want to take a look and see what the 5 minute time frame is done. So here's the range low. And you can see here, this 5 minute candle is starting to breach. Now, I can trade this 5 minute back down to liquidity. So let's go get our indicators back on the chart here. So if this 5 minutes, I've got about 3 minutes left. And if we close out and then we come back to retest this area, I could look to sell here and chase after the sell side as a scalp. But to be honest with you, traders, based on what I saw on the lower time frame, I would prefer to see a liquidity sweep and then the market turn back up north. It takes a lot of patience. It takes patience to be able to find the right opportunity. All right. Going to wait it out. While we're waiting for this to set up, traders, while we're waiting for this to set up, we're going to go ahead and take a look at our currencies here. Let's go to let's take a look at our which is the first pair we want to go take a look at is US dollar CAD. So let me open up the dashboard here, take a look. So you can see right here, traders, I've built up 8 positions. I've got a hard stop at this point right here. If price gets to that point, we're going to close out. Here's my break-even point. Here's my take profit right here. I could offer to take to look for more profit on this trade if I choose to. All right. So if I want to look for more profit in that trade, I could certainly look for more profit in that trade. But for right now, let's just go ahead and let's take a quick look while we're waiting for this candle to play out. Let's go take a look at the markets right here. All right, we're looking at the 4-hour time frame here on the US dollar CAD. And you see this order block, this order block's holding up here. Let's take a look at the daily. We've got a lot of price manipulation here at the top here. Let's take away the indicators a little bit so we can see what's going on with the chart. So notice here, traders, notice how we got a lot of resistance up here at the top. And the market's respecting that. If we get a reversal back down south here, I have to look for a fair value gap. The fair value gap that's sitting is right over here, but it's a very small one right here. So I'd like to look at the 4-hour. And on the 4-hour, do I see anything in the 4-hour? Well, notice how the market swept the liquidity high up here at the top. And now we're moving back down, but I still don't have any clear directional bias for an opportunity to go ahead and enter a new sell on this trade. Now, my bias is bearish overall, right? Based on, you can see here on the daily time frame, we're seeing lower lows, lower highs. So price is moving down south, and there is a resistance held up over here at the top. Now, the one part that is a little concerning, I'm going to draw this to your attention, is the fact is, if you take a look at these swings, we have a swing low, all right? So we've got swing, high, low, high, low. So this is a wave 1, 2, 3, and then to 5. So if this is wave 1, 3, and 5, then this is wave 4, and price could want to go ahead and take out liquidity here at 1.3925. So traders, we may end up breaking through this resistance. That's why I say there's not a clear directional bias. All right. But if we do continue to move south, and if we look at the bias here on the chart, all right, let me go to my chart right here. Take a look here. The directional bias is bullish. The trend is bullish. So traders, that's telling me that we could very much stay above this area and target this area right here. So 139.25 could be a target on US dollar CAD. Now, if you look at our trades, our signals, we are going to take a loss if price moves up here. Now, we have a little bit of room for price to move down here. And if it does, we're certainly going to go ahead and get the heck out of Dodge. Now, I could make an early decision. So instead of waiting for a stop to get hit, if I'm not comfortable with the setup and I believe price is going to go up without moving back to my target, I could take an early decision, cut my losses. The system tells me that, hey, I'm going to take a loss of 0.3%. And sometimes it's better to do that, especially if the trend and the bias is moving against you. And then you go ahead and you analyze the market. And the market right now really is not telling us a lot with regards to how much we're going to be pulling back. So we are getting a resistance. We do see a little bit of accumulation forming here. So there is the possibility of the market staying inside the accumulation, but there is a high probability price could go up to this area. So you got to weigh it out, right? So the extra risk we put on the table is 0.2%, and maybe it's worth it just to go ahead and make sure that we're not getting this correction move taking place. Now, I could go ahead and move this down to a 30-minute time frame here, and I can look at the 30-minute time frame and say, all right, maybe there is that possibility. We can see here there was accumulation formed right here. Price then manipulated here on the top, and now we see this this downside move. So yes, price could go down a little bit down to this area, all right, where we could go ahead and look to close out a position and then go ahead and make a decision to reverse it in the opposite direction. So we'll give it a little more time. We're not quite at the point where it's not a case of we're losing 5 or 10% on our account, right? We're talking about an extra 0.2%. And so making sure that you got proper risk management in your trades is very important. And also making an early decision on your trades is also not a bad idea. Okay. All right, let's go back to our NQ trade. Let's just see what's going on with the NQ trade so far. And let's see here. All right, go to the 5-minute time frame. All right, so here's the 5-minute right here. Now, traders, the markets are doing a lot of stuff, but one thing it's not doing is doing what we really want to see. All right, so here we can see the 5-minute this is the 5-minute range. We had a break of the 5-minute, and traders, I wanted the market to come back to retest the break. You can see a little bit of a pullback. It didn't come back. And just as we indicated, sell side is where price is probably going to be chasing. Now, once it takes out sell side, then we want to look for the reversal going back up north. Now, if I put back that 4-hour, let's take a look at the 4-hour. This is what the 4-hour candle looks like right here. So this is how it's going to close out. So traders, what I'd like to see here is that this 4-hour candle, the low of the 4-hour candle, become a area of resistance, or at least support in this case. So this 4-hour low right here, this is going to be our 4-hour low from the opening high to this area right here. So I'm going to mark that off as this is my 4-hour low. All right, so this is going to be, I'm going to mark it off here as H4 low. All right. And why is that important? Because traders, if we get the market to manipulate through that area and we start to come back, the opening high is going to be the target. All right, because remember we said we want to see liquidity sweep, all right, sell side sweep, and then we want to see distribution. So accumulation, manipulation, and then distribution. And so we're looking at this as the 5-minute accumulation here. This is our manipulation move right there. And now we're looking for this distribution. All right, let's wait and see. Now, already on the 5-minute right here, I can see there's a fair value gap sitting over here. All right, fair value gap sitting over here. And, oh, that's my wife. Honey, could you just give me some more? Thank you, sweet chicks. There we go. All right, this is what you got. This is what you have to do, guys. Listen here. If you're not eating breakfast, all right, while you're trading, you got to definitely try it out. All right, nice breakfast served to you as you trade in the markets. All right, let's take a look right here and let's see what we got here. Good morning, Linda. Good morning, Linda. FX Business, good to see you. William, good to see you there too. Buenos dias. I hope I said that right. All right, there we go. We got some manipulation here, traders. Manipulation. I'm going to go now and start moving down to my 1-minute time frame. Let's take a look here. See, here's the 4-hour candle. Now, check this out, traders. Check this out. There's your 1-minute fair value gap here. Going to mark this off, maybe for some scalping. All right, I'm going to take out these. All of these fair value gaps here are not important to me anymore. This is going to be important. Now I want to take a look and see what my 5-minute does. So I'm going to change this candle here. Oopsie, sorry, my bad. I'm going to change this to the 5-minute candle now. So you see, I'm like, I want to see how the 5-minute candle is. And I might change it to a 15-minute too. This is the 5-minute candle right here. If I trade above here, this could be a buy opportunity. See, we've taken out sell side. Because we took out sell side, now I'm looking to see if price is going to move back up again. We get a nice little run. We got about, all right, this candle just opened up right here. We're going to see it close above here. If not, this might cause that manipulation to move back down south. No, you see how the market's respecting that level? So we're probably going to go down deeper. Got 2 minutes to go before this candle closes out. And traders, I'm not interested in selling right now. Just FYI, my draw of liquidity is the opening range high up here at the top. So I'm more interested to see the market go ahead and turn around and head back up north. So very important why we have to be patient here. And you're probably looking, and traders, you're probably looking at this big move to the downside here and say, "Big dog, why did we take advantage of this big move?" And yeah, look at it from the top here, all the way back down here. That's 1,000 ticks. I mean, think about it. All you needed to pass evaluation is 300 ticks. Trading 20 cons. Now I get it, but you got to be patient. All right, here we go, traders. We've got about 20 seconds left. I'm going to start getting my buy set up ready to go. And what you want to do is you want to enter. Let's just do some scalping here. Let's put a 150 tick stop loss on this, and we're going to chase after 150 ticks. All right, that candle closed out. It didn't close out above. Still be patient. I'm going to wait. New 5-minute candle is opening up. And I'm going to watch this candle right here. Let's get a break above this this 1 minute. And by the way, if it takes out this 1 minute fair value gap, we're probably going to go up to this area right here. How far? Let's see here. What's the distance? Yeah, about 200. We might be able to pick up 200 on this. We've got, let's see here. We've got about 17 seconds left on this trade. There it is, 17 seconds. And maybe there's still going to be another sweep here, but we'll take the first trade right here. I'm going to be risking. I might even place my stop loss below this and chase after more profit. So you got 1 minute left. There we go, traders. We've got to buy. All right, I'm going to put a buy in here. Now I'm chasing after my stop loss. I could put my stop loss a little lower down here to put it below the swing low. So stop loss below the swing low right here. And traders, we could also offer a bigger, we can go all the way up to that swing high right here. So we're chasing after a little bit of profit here in the top here, swing high. And remember, this is the 5-minute range low. So I'm going to be taking profit just above that area because the market's going to come back to retest that level. And if we trade back inside minute range low, we're probably heading north. But if it rejects that level, traders, we can chase after a further move to the downside. Okay. So there could be another dip to the downside if this 5-minute range low doesn't hold. All right, now we just wait it out. Now, some like to move their stop losses a year below the fair value gap. I don't put it at the fair value gap because sometimes the market will take it out. If I do see the market invert below here, I could make an early decision to cut loose. But I'm going to hold on to this position here a little bit longer. And I'm also going to take a look at my 15-minute candle to see what my 15-minute candle is doing. Because we're just about... So my 15-minute candle is indecision right here. You see what I said about a test of that fair value gap there? So although it's support, the market's respecting it, but we did have a little spike through that area. So moving your stop loss too tight all right, can sometimes be, sometimes put it in the way. Now we did get this sell side delivery here, right? The market took out sell side right here, but remember what I said to you? Sometimes it's always good to wait for manipulation first. We enter the first trade. I said I was going to enter the first trade, but if this one doesn't play out, then that means that we have manipulation, right? Price is going to, let me just put it below that stop there, just so it's. So we're going to make sure that if this one doesn't work out, then the second trade is what we're going to go ahead and re-enter. If there's a fair value gap here, and the market creates another fair value gap going long, and it trades above that, I'm going to enter on that trade. I don't like it that it's gapping right here, but I'm going to look over here. Now, there's two things. If I get a fair value gap, right? If I get a fair value gap sitting over here and the market inverts above the fair value gap, I'll enter. And if I get a railway track here, that's also another entry point right here. We got about 20 seconds left on this. See the 15-minute time frame? The 15-minute time frame, we've got about 5 minutes left in the 15. Still looks like an indecision move. So the market is respecting that level. This is a half moon. Not enough for me to want to enter a new trade on this. And it looks like the market came back to this point of interest here as well, right? And again, we're 5 minutes in before the 15-minute candle closes out. And if I go to let's go to the 5 minute, see what the 5 minutes doing here. Oh, you see the 5 minute? I like that. I like the way the 5 minutes closed out right here. Still wouldn't add into my position right now. Not my first trade. The first trade, don't get too aggressive on your first trade, because your first trade you might miss. It might be a manipulation, right? You might be caught up in manipulation first, unless the market manipulated. If the market manipulated, then my first trade would be aggressive. But if the market doesn't manipulate and we get in on the first trade, be very conservative on the first trade, because it might be that you have to get aggressive on your second trade after manipulation. It's still looking good based on my 15-minute time frame. And traders, we will get into some currencies, so stick around, traders. We're still going to go ahead and cover some currencies pairs this morning. And you should really have maybe either a one and done or two trades one and done. All right, looks like we got. Hang on, is that a little bit of manipulation here below the low here? Is this a liquidity sweep here? A little bit of, but what's important is we got a failed break of structure. That is good. So if I go here and I put this as a liquidity sweep here, traders, if we break above here, which is where our entry point is, this is going to look solid. Let's see. So this is actually showing a failed break of structure. And if it's a failed break of structure and it starts U-turning, I don't know. I don't like it, but let's see if it holds. Let's see if it holds. Because if it turns up and takes out this high rate here, I might just go ahead and add into another position here. Oh, did we get stopped? Ah, we did. Oh, did we? No. Wow. That was close. Oh, look at that. See, that's the sweep right there. That's the manipulation right there. Let's see if that holds. Oh, I think we just stayed in. All right, this is it. All right, there we got swept. All right, so this is the sweep. Now, now you say this is the second entry point if the price trades above here. If we get above this area right here, this is what I'm looking for, break of structure right there. Or at least this is going to be my market structure shift. All right, looking at change of character sitting over here. Remember I said to you the first could be manipulation. It's the second one that we're going to go ahead and jump in on. So this is still a 4-hour low right here. And I want to get back above the 4-hour low. I pay attention to those details. And we still have our opening range high up here at the top. And traders, if we go above this area here, not only are we going to go back to the 5-minute opening range right here, or at least the 5-minute low, but we could also trade all the way up here to the top. All right, let's see. All right, I'm gonna put an alert here at this level. I want to go ahead and set an alert there. So if price does break through that high, I want to be aware of it. Did we just open up 5-minute? Yeah, we did. All right, let's go back to the 5-minute here for a minute. Yeah, look here. See how the market goes ahead and accumulates? Then we have this the sweep right here. This is the manipulation right here. Now I'm looking for price to go back up here. We're probably going to get a nice little expansion move now. See what I said about manipulation first? When the market manipulates, because think about it, traders, think about it on your own trades, even the Forex, trading Forex, right? How many times have you entered the market, put a stop in, only for the market to stop you out before it goes in your direction? Have you ever experienced that? Right? The market takes out your stop and then takes off in the direction of the trade you were in. That's why it's always better to be patient. Sometimes it looks good, but what ends up happening is price manipulates before the run. All right. And that is just smart money taking out retail traders to drive price down, because resting buy stops or resting buys and resting stops at those levels becomes an attractive level for the market. All right. All right. So we got the 15 over here. I'm going to go back to the 5-minute here. And do we have a railway track here? Yes, we do. Traders, this is where I go. I'm not going to go aggressive right now. We're going to go 20 contracts. Not going to go aggressive right now. But you see this railway track after manipulation right here? That's what I'm interested in. And now, traders, stop loss below the railway track. Stop loss below the railway track. And our take profit is going to be up here at right here at the range high. Now, once we get into profits that's covered our first loss, we can let the rest run. And if we get back above the 5-minute range low, there's a high probability that we could all the way go all the way to the opening range. Now, you can let some runners go, all right? You can let some runners go, or you can simply go ahead and just cut loose. Now, if you like to scalp, you can go ahead and do things like this and scalp $200-300 a day and just scalp the markets with 20 contracts. All right. By following this simple rule, and traders, like I said before, I'm going to say it again. If you wait for manipulation, all right, you have a high probability trade. And sure, sometimes sometimes the market doesn't show that manipulation and it takes off because the sell side was strong and the market took out that sell side or buy side and it ran off. But in most cases, even when the sell side is taken out, looking for that manipulation is going to help you to be able to profit more on that trade. All right, where's that four? Okay, here's the 4 hour low. So it looks like the market's staying above that 4 hour low right here. And that's what you want to see. You want to see the market respecting that 4 hour low. And anything above that, you want to go ahead and buy. And now, if I change this is the 2 minute time frame right here. If I go to the 1 minute, we've got a change of character here. The 2 minute is slightly higher there. I'd like to see the market trade above that. The market's retesting that sell side delivery that we took out. The opening range high is still going to be the draw. Whether this works out or doesn't work out, whether we make a profit for the day or don't make a profit for the day, the opening high range will be the target. So which means that eventually at some point, price is going to go ahead and move to the right side of this trend line, and we're going to chase after that target. So I'll put my downward trend line here. And as price moves to the right side of this trend line, opening range high will be the draw for the day. And if we don't hit this, then come Monday, we're going to be looking for that opening range high Monday as price starts moving towards that level. All right. All righty. Linda says, got to stop that. Yeah, Linda, remember the first one? The first one always going to be, the first one is always more of a high risk trade. It might be a quick move and you could profit very quickly, but it is the second trade. That's why, really, to be honest with you, if you trade the first one and you get manipulated, and you trade the second trade, and you get taken out again on the second trade, then you got high resistance trading environment, and you shouldn't really be trading that at all. Then just cut loose and start paying attention to other stuff. But you shouldn't overtrade. 2 trades should be enough to be able to trade the first one and then the second one after manipulation. Or if you get in on the manipulation move, then most likely one and done is what you'll be looking at. If you get in on a trade that the market has already manipulated, after sell side has been swept. So sell side sweep, then manipulation, then enter. Or buy side sweep, then manipulation, then enter. If you follow that process, then you're most likely going to see a higher success rate in your trading. All right. It's when you enter the market before the sweep, you might end up actually holding on to your position. You might end up losing on your first trade. That's why I said don't be too aggressive on your first trade. All right. Always make sure you got extra equity available for at least your second trade. All right. Because if you're trading funded capital, remember, funded capital, they've got now a daily drawdown. And if you hit your daily drawdown in your first trade, you're not going to be able to trade that second trade. So make sure that if you're going to be trading your max drawdown for the day, then have enough to be able to have a second entry point. All right. Enter 1, enter 2. All right, our jackpot trades, just by the way, closed out the New Zealand the JPY. So for those traders that are following my jackpot trades, we just closed out the pound JPY, and we did close out the New Zealand US dollar as well. It was in a sell, so it looks like we're getting a little bit of strength coming out in the dollar. All right, traders, you know what we're going to do? This is our trade setup right here. If we get swept, if we get taken out, we're done. All right. So we're gonna let it run, and while we let this run, we're gonna go ahead and pay attention to our let's pay attention to some forex trades, because either this works out in our favor or it doesn't. I don't have to live and die by the candle. All right. I just got to go pay attention now to other stuff. So let's go take a look at the trades that just closed out. We had a closeout trade on the JPY right here. And traders, if we close out and the bias and the trend still remain bearish, then we will go ahead and continue. So look at that big move right here. And let's go to our system. And if we go to the JPY right here, here it is. It looks like, check this out. And by the way, let me double check here. Yep, we were selling. So we were selling on the pound JPY, and you can see here the bias is bearish. So we got this move that we managed to get out of that trade. But look at the trend. The trend has gone bullish. All right. Now, if the trend's bullish and the bias is bearish, we have conflicting directional bias, which means there will be no trade set up. Normally, we would enter straight away if the bias and the trend are in the same direction, but it isn't. Now, let's go take a look at the pound JPY. Let's break this chart down on the pound JPY, and we're going to go to the daily time frame first. So here, traders, you can see that we do have a bearish bias. The market's actually trading inside that bias, and that's why we can really trade back and forth, back and forth. But the problem is, even though the market has gone, we have a change in the market trend. And here you can see right here, right? The trend has gone bullish. And so it's been doing this for a while. If you look over here, see how the market has gone ahead and given us a change in direction right here, right? We had a drop back south. We went bearish here. Then we went back bullish. Then we went bearish again. Then we went bullish again. So, and here, if you can see my blue lines, daily range, high and low. See how the market's ranged between those two levels and how the market's chopped inside that back and forth, back and forth, back and forth. But the most important thing here is, traders, that is we stick with the bias, right? Now, I'm going to go to the weekly candle right here because we do want to look at this from a larger perspective too. So my daily bias is bearish. So I've got a bearish bias, which is good. Let's go double check here. See here? My bias is bearish, all right? So bias is bearish. The trend is bullish. Do I want to trade a trade if it goes bearish again? Well, let's take a look. If you look at this daily, the weekly here, the weekly high is, this is the last weekly high right here. So this is where I really want to protect myself and put my stop above that area. So if I look at the weekly trading, I can see this big bearish candle right here. And notice something here. If I go ahead and take the top and bottom of this move, in fact, sorry, let me go the bottom of the move there and the top of the move up here. All right. Price is trading above this range. Now, if the market why is this important? Because traders, this 50% level right here separates premium and discount. If you're looking to sell a particular pair, if you think the overall bearish is bearish, all right, then traders, what you should always be looking for is opportunity in a premium zone, all right, which means above the 50%. And if you look over here, we are above the 50% right here. So now when I go down to my lower time frame and I look for things like a 4-hour fair value gap, let's see if I can find something on the daily. Okay, so here on the daily, we had this big bullish candle. And then we had a bearish candle, which is not a full moon on that. So I like to see full moon. This is a half moon. But I'd like to see what we'd like to call a railway track sitting over here. We didn't get that. But what's happening is, see this previous high right here? When you get an expansion move through that zone, and then it comes back below here, this area becomes an attractive area as well. And anything bearish below here, you want to go ahead and sell. So if I go back to the 4-hour right here, all right, here we got the 4-hour fair value gap. Price is respecting that 4-hour fair value gap. And if we go even closer up now to our 30-minute time frame here, we can look for reversals at the top. And what reversals will we look for? Traders, here it is. Here we have an inversion appearing right here on our 30-minute time frame. This is where traders would be looking for an opportunity to sell. So as the market goes up, we have an inversion. We trust in this. We trust in the range is holding. We enter the market. You can see here. You can wait for the market to test this, and as it tests this, we turn around and we're heading back down south. All right. This is where you can tighten up your entry point. If you put an entry point in over here and you sell, all right, you go ahead and sell at the midpoint of that fair value gap. Stop loss is above the swing high. And what are we targeting? We're targeting the range low, or at least we're targeting the low, because this is going to be the draw of liquidity. Look at the risk reward ratio when you really detail your trade. We're looking at a 1 to almost 5 risk reward ratio on that. Traders, these are really good, solid trades. It takes a little time to fine tune them, but once you find these setups developing right here, there's ample opportunity. Currently, right now, the market has already moved a 1 to 2 risk reward ratio. So what are you going to do? Move your stop to break even. All right, put your stop at break even right now, and now this is all profit for you. All right, let it ride with zero risk on that trade. All right, this is a zero risk trade right now. So yes, if we do get we get the market trend to go bearish, we'll go ahead and enter that trade. Let's go take a look at our. Hang on, let's go back to NQ trade. See what's going on here. So NQ trade still trying to figure out itself here. Let's see if we've got any new signals here. Nothing new. Still looking for a breaker structure right here. All right, so it's working its way. Okay, let's give it more time. Let's be a little more patient on that. Let's go to ETH here for a minute, and I'm going to go to gold in a second. We've been talking about gold. I'm going to talk about gold in a minute here, but here's ETH. So on ETH, if we go to the weekly time frame, all right, take a look at this nice little U-turn that we had right here at the bottom. Where did the market U-turn? After it took out liquidity here, and it's U-turning at this fair value gap here on the weekly. So we have a weekly fair value gap. It's respecting it, and it's also gone ahead and taken out sell side delivery here. All right. So if that's the case, we should be expecting an upside move in ETH. Now, this is the bonus here. You see, so price has gone ahead and accumulated. We manipulated to sell side. We tested a bullish PD array on the weekly. And now, traders, we're looking for distribution. So now I go to the daily time frame. All right. I'm looking at the daily time frame, and what I'd like to see is, in fact, even on the 4-hour, what I'd like to see is a trend change. So here we go. Market manipulates down here. Price goes up. And we can see here, this right here is where we can see the market starting to take off. Now, we've gone ahead and broken structure right here. We've broken structure right there. So the next break of structure is here at the top. As long as this low holds, because this is the lowest point between the break of structure and the new high, this is where we want to go ahead and see the market stay above. So the next move for us on ETH would be that we want to see it break above some sort of fair value gap. So I'm going to go ahead and clean up some of the stuff right here. Do some housekeeping here. Do a lot of housekeeping here. All right, so we got a daily fair value gap here. Let's see if I can find a new fair value gap. So I'd like to see an inversion of that. So if price can trade above 2,300, that'll give me a conviction. Let's see here. Okay, so here's an opportunity here. You see here on the 4-hour. See there? Here's a 4-hour fair value gap here that the price is respecting. I'm going to mark that off as a 4-hour fair value gap here. And if we get above here, we can see a change of structure right here. So I'm looking to see if price is going to trade above this area here. And if we do trade above that, that'll be a change of character. So break above 2,230 will confirm that we see a market structure shift and that price is going to continue to move north. So this is what I'm looking for right here, traders. I think we're at the bottom right here, is because we already moved in below the breaker structure. Here is a fair value gap here being respected. I'm looking for price to go back up here to 2,230. All right, we'll take a look at gold here in a minute here, but let's go ahead and take a look here. All right, looks like an NQ trade is doing fairly good right here. Let's go back to here. We can see we'd like to get a market structure shift above the 2 minute, which is up here. Here we get the 1 minute. You can see right here it hasn't broken through the 1 minute. Now, traders, if we go back to the 5 minute here, get a look on the 5 minute. We've got about 1 minute left on the 5 minute. You're going to get a nice little push here. I'd like to see it break above that high and displace above that. We've got about 30 seconds left on that. But I do want to see it break above there. And then, traders, yes, we're going to be targeting this area right here. Oh, there we go. The run starting, my friend. All right, the run is starting. All right, well, again, traders, I don't have to live and die by the candle. I know what I need the market to do. I'm just going to let it ride. We'll come back to that, but let's go to gold. Let's take a look at gold right here. Now, traders, if you've been following me in my live sessions, I've been talking about gold, all right, moving to the mid 4,000s. And why did I say gold's going to move to the mid 4,000? Because there was generated liquidity here. If you go to the daily here, as price rallied up here, we had this big, strong rally here. Then we had this drop. When the market dropped down here, it started generating liquidity here. And I said to traders, I said, when price came up here to our point of interest, we recognize that the market's going to find resistance there. And I believe this is a 4-hour point of interest inside there as well. Yes, there it is. All right. So there you can see there's the 4-hour fair value gap here. Price comes back and taps into that area, turns south. We then see a change of market structure right here. Price goes back and taps back into another 4-hour fair value gap here and sells off and hits back down south. Why? Because there's generated liquidity here that the market, smart money, needs to take out. So yes, this move in gold is an expected move, and the market's doing exactly what it should be doing. And traders, I don't think we're going to get some upside move until this low right here at 4,411 is taken out. So I think that we're going to remain bearish, right? So if we look at our trend, and by the way, I can just go to my indicator, right? Let's go to, or at least to my smart entry bot. If I go to my smart entry bot, it's going to tell you exactly which direction to trade. The trend is bearish and the bias is bearish, all right? So what do? You follow the trend and the bias. So all you do is you just go down and go back to the chart, go to a 30-minute time frame, and look for bearish opportunities. Look for reversals. Any correction move that the market takes, look to see if you can get some sort of inversion. Here we go. Right there. So the market goes ahead and rallies up, creates this fair value gap, inverts below that, comes back, retests that, sells off, back down to support. So here we go. All right. If you go ahead and mark this off right here, and the midpoint of the inversion is your entry point. Stop loss above the swing high right here. Always place slightly above that in case it gets retested. And then look to target the low right here. Risk reward ratio 1 to 2.6. And if you extend it further, you're looking at a risk reward ratio 1 to 6.8, right? Treasure. This is how you go ahead and you follow the trend in the bias, making it a high probability setup. All right, let's go to NQ here again. Let's see who we are NQ. All right, looks like high risk. All right, so here we go. So we've got this. So I'm going to watch this candle here, because if I look at my 1 minute time frame, see how the 1 minute time frame did go ahead and create this change of character here. And now we're moving into a fair value gap right here. So we're tapping into this fair value gap here. All right, so I'm going to go ahead and mark that off. We've got how many minutes? We've got about 30. We've got about 30 seconds left on this right here. If the market respects this, I might go ahead and add in a new position here. Let's see if the market, and then we'll go back to some more currencies. So we've got about 16 seconds left. And looks like we're going to respect that low. Yep, there it is. All right, I'm going to go long again. So I'm adding to my position here. And now I'm going to tighten up my, no, I mean, actually, yeah, I'm going to tighten up the stop loss a little here. Actually, no, you know what? Just keep it where it's at. Can you keep it where it's at? Traders, I know where the market's going to go. I'm going to trust my analysis. I know where the market's going to go. I'm just going to let it ride. Trust it. It's been a while, but trust it. Okay. Now, by increasing my entry point here, I've doubled up my lot because now we got a market structure shift. Price came back to a fair value gap here. We already had a liquidity sweep. So the trend should be bullish. And if anything, we should take out this high. I could start looking to maybe take some profit off the table at this point right here. All right. So when the market comes to this area, I could go ahead and scale out of my position and then let the rest run towards my target here. Right. Now, if it works out, great. If it doesn't work out, traders, it is what it is. I'm going to move on to some currency pairs again. All right, we'll come back to that. I want to take a look at this right here. US dollar. Actually, you know what? Let's take a look at the Euro Aussie dollar, because the Euro Aussie dollar looks like we're close to taking profit on that. All right, so let's go to the Euro Aussie dollar right here, and let's take a look at what our system's doing. So firstly, I noticed that the bias and the trend are both bullish. All right, bias and the trend are both bullish. Now I've got a sell on this, and here's my risk. You see what my risk is at? 0.13%. All right. So, do I want to add more positions to this? And number one, number two, am I at a point right now where I should be looking to cash out? So this is the thing right here. Let's go to the euro, and we're going to go to the 4-hour time frame on the Euro Aussie dollar. Actually, in fact, let's go to our weekly time frame first. So on a weekly time frame, we're going to play stop loss. If we're selling, we're going to play stop loss below this, above this area. Why? Because traders, if the market's bias remains bearish, then we should be fine. All right. So if you look at the weekly, what has the weekly done? This is why I brought you the weekly. We've seen accumulation. We've seen manipulation. We're looking at distribution. Distribution target is all the way down here. So our overall trend is bearish. But here's the kicker right here. All right. There is a correction due. All right. So even though we're overall bearish, there's a correction due. So let's go to my daily candle. So my daily candle, the correction, the turning point will start off with a reversal. So here's my stop. So my stop is way far away. Here is the daily fair value gap. So traders, because we were in a bearish bias, all right, or at least a bearish overall trend, I want to see if the market's going to respect my fair value gaps. So traders, I don't want to trade this. All right, I don't want to get out of this trade yet unless the market disrespects this fair value gap. So when I go back to this trade right here, you'll see my trading stop loss is way up here. All right. I've got a lot of time, and my maximum risk on that is 0.47%. So I don't have to worry about this trade. All right. Because I've already exposed myself with a bit of risk, but I'm definitely going to pay attention to what happens here on the daily. if the market disrespects this daily fair value gap and the bias and the trend are against me, I'm going to go ahead and cut my losses and get the heck out of Dodge, right? Because why must I go ahead and risk 0.5% of my trade when I already have got early warning that the market's going to go towards that area, all right? Because if we disrespect this daily fair value gap right here and price trades above that, it's most likely that we're going to look for buy side liquidity, which is sitting up over here at this area. All right. So this is going to be my buy side draw right here. All right. So this will be the buy side draw. If the market disrespects that, then the buy side draw will be this area here. All right. And that is way above where my stop's going to be placed. All right. All right, traders, let's go take a look and see how NQ Trade is doing here. Looks like it's high resistance conditions this morning. And markets are still not moving quite that great. And I'm going to let this thing ride out. Man, it's been a really slow morning. So after that big move, it's taken its time. It's really slowed down on this correction move. Let's go to a 2 minute here. Let's take a look at the 2 minute. Okay, well, that's good. The 2 minutes are showing that look at the 4 hour low. So the 4 hour low is acting as a support level for this. Let's see if it holds. And we actually get a break of these equal highs. The market loves equal highs. So these equal highs over here at the top, price is going to come back here and take out those equal highs. All right? Because these equal highs tells us that there's some traders selling the market, looking for lower lows. And that's why smart money will want to take out these equal highs because there's resting buy orders sitting over there. And price will take it out. Traders, this is my trade. We'll see how this plays out for the rest of the day. You can follow it on your own. Check it out. This is where we're at. I want to go ahead and thank everyone for their time today. Appreciate you being here. Hopefully you guys learned a little bit from here. Not only we do some live trading and take a look at the markets and analyzing both futures, Forex, gold, silver, gold, ETH. But we also passing on some education as well at the same time. So we want to pass on some education. We want to make sure that you are paying attention to some details of what's going on in the marketplace, and traders simply just learning and improving ourselves as traders. So with that being said, traders, once again, if you guys want to get involved in what we do every single week, check out the link up above. All right, I want to go ahead and point that out. Check out the link above. Also, I want to give away for everyone that's here. I want to give away a bonus funded account. DNA Funded has given us some funded accounts that we want to go ahead and pass out to you. So what I'm going to do here is I'm going to give you a code, and I'm going to tell you where to go ahead and put this code in. Now, this code is only available for one person, all right, for one person. So once this code is used, it's not going to be available for anyone else again. So what we're going to do is I'm going to go ahead and slowly give you the code, and then you're going to go ahead and type it up here, but I'm going to first tell you where to go. All right, so here, number one, I'm going to go ahead and give you this, let's see here. Yeah, so go ahead and do this. Click on DNA Funded. All right, click on DNA Funded. Then what I want you to do, I want you to go to two phase. All right, go to actually, no, go to one phase. I'm going to give you a one phase 50K account. Go to one phase right here, and then go to $50,000 a year, 50,000, and click onto that. So you're getting a $319 gift right here. Click on to, now you better move fast, guys. Move fast. Click on $319 right here. Click on that. All right. Now, this is where you're going to see. You see where it says they have a coupon? I want you to click on that and get ready. All right. This is where you're going to put the coupon in. All right. Now, when you go ahead and put the coupon in, click apply. Whoever clicks apply first will get access to that. I'd like to find out who actually got access to that. So this is it. All right. Remember, go to DNAfunded.com, go to the 51 single phase account, and I'm going to go ahead and pass on let's go here. Let me just give me 1 second here. I'm going to go ahead and pass on the coupon here. And let's see who's going to grab this. So this is my appreciation to you guys for joining in the live session. Every week we're going to give away a giveaway. And here we go. Traders, here we go. And I'm going to give out the coupon. So this is going to be a oh, sorry. Hold on a second, guys. I said 50 instead of 50K. It's a 25K. It's a 25K. So let's go back here. So go to and it's a one phase. So click on one phase. All right, click on one phase. Go back. Click on one phase. Go to the 25K and click on this right here, 179. Click on 179 there. I do actually have 50Ks, but that's for my students. All right, so click on to coupon right here. All right, and then right here under the coupon, here's the code. Are you guys ready? All right, are you ready? Here's the code. Here's the code. T N C underscore. Everyone knows what an underscore is, right? TNC underscore 6 V L 7 Z for zebra K J, and the last letter is coming up. The last letter is coming up. Hold on a second. The last letter is coming up after this. All right, traders, the last letter is E. The last letter is E. All right. Now, not only do you have to apply the coupon, but you have to go ahead and make sure you complete the details and go ahead and confirm. You'll see once you apply the coupon, it is at a zero cost and you are ready to go. Now, this is the great thing about it. You can go ahead and use your fund account however you want, or you can go ahead and join our live, take a ride with us, and we can go ahead and get you either connected to a replicator or go ahead and get you connected to one of our systems, a smart entry AI bot to be able to trade it for you automatically without you doing anything. So if you're using the coupon, all right, it will go ahead and you'll see here, it's got it at zero. You've got to fill out the information, and then the first person to complete the information and fill it out will get that coupon. So the coupon has been successfully applied. It should give you that zero right there. All right, you can see there, zero. Traders, the coupon is available for you. The first person to go ahead and complete that will get that coupon. And there we go, traders. That's it from us. So with that being said, traders, let me know. Send us an email at support@tradersnetworkclub.com. Send us an email if you have any questions, but also I'd like to know who the winner was, who actually got access to that. Please do me that favor. We're going to do this every single week. We're going to pass on coupons for funded accounts. We're going to give free funded accounts away every week. Share the news. Join our live sessions on the Friday, traders. Have a fantastic weekend, and we'll see you guys next time. But send me an email at support@tradersnetworkclub.com. We'd like to know who the winner is. So with that being said, traders, Have a fantastic weekend. See you next time.